The Reserve Bank cut official interest rates from 4.1% to 3.85% as expected. That's the second cut this year, taking them to the lowest level since May 2023 as inflation returns to its target band. RBA Governor Michelle Bullock says the board did discuss the possibility of a 50 basis point cut, but it wasn't the strongest argument, and that the economy is now facing a new set of challenges as US trade policy unravels.
One thing to keep in mind, we have made the judgment that global trade developments will overall be disinflationary for Australia. However, there is a risk to inflation on the other side. The trade policies could lead to supply chain issues, which could raise prices for some imports, much as we saw during the pandemic. And so we'll also need to be alert to such upside risks.
Australia is better placed and better prepared than most to deal with that uncertainty. Today's interest rate cut reflects that.
Within half an hour of the announcement, each of the big four banks confirmed they'll pass on the cut in full to their variable home loan customers. NAB was first with the news, with the new rate coming into effect from the end of the month. That's the same for both CommBank and ANZ, although those at Westpac will have to wait a little longer. Some savings rates will also be reduced. But for borrowers, those with a $500,000 mortgage over 25 years will see their monthly repayments drop by $76 more on a $750,000 loan, according to analysts at Canstar. However, to get that reduction, you'll likely have to contact your bank. ANZ, CommBank and NAB customers won't have their direct debit minimum payments reduced automatically. Instead, they'll be kept at the higher amount. That means the loan will be paid off quicker unless you call them, visit a branch or request a reduction online. CommBank says only 14% of eligible borrowers asked for the lower repayment amount since the February rate cut, and even fewer at ANZ and NAB.
The consumer effectively has a deleveraging mindset at the moment. So additional cash that comes into consumers' wallets is being used to pay down debt. And that reflects really, I think, quite a cautious consumer.
Westpac automatically applies the new repayment to those only on the minimum amount. But it's not just borrowers seeking relief.
I'm renting, so I hope that the landlord, with the interest rate coming down, they can cut some of the rental.
I think the real problem isn't here in Australia. We've got to look at the global economy and how that will impact on us down the track.
Those global concerns saw the Reserve Bank revise its economic forecast today. GDP now expected to be a little weaker to the end of 2025 and 2026. Unemployment is forecast to be a bit higher than the 4.2% it previously penciled in, but the underlying rate of inflation, which is the measure the RBA prefers, is predicted to be close to the midpoint of its 2 to 3% target band for the foreseeable future.
The market's expecting another two rate cuts, 25 basis points each this year. The interesting thing, I think, in terms of the language that was used today is that you shouldn't expect another cut next month. It's more likely in August. The Reserve Bank is still going to be weighing what's going on from a global perspective, but also wants to see, inflation behave itself over the next couple of months.
Investors like the news, sending the share market higher. The ASX 200 up by 0.6% by the close of trade. Property and bank stocks benefited from the lower interest rate outlook. Software group Technology One was the best performer on the 200, following a stronger sales update and record interim dividend. Telstra rose as it announced price increases of between $3 and $5 a month on most of its postpaid mobile data, home and small business internet plans. The Australian dollar is stronger against the greenback, buying 64.16 US cents. And while it's down against most of the other major currencies, it rose against the Chinese yuan as a key interest rate there was lowered. A barrel of oil is currently fetching a little over 65 US dollars, while gold continued to retreat from its recent peak, falling a further 0.3%. And a new report has found minimal competition in the domestic aviation market, along with strong demand, has resulted in substantial first-half profits at Australia's two major airline groups. The ACCC says combined, Qantas, which also owns Jetstar, along with Virgin Australia, account for 98.3% of the domestic market. Qantas dominates in corporate travel, while Virgin achieved record interim profit. Those records are being extended overseas, with its newest partner, Qatar Airways, recording a $2.15 billion profit, the strongest in its history. The competition regulator says the Qatar-Virgin alliance should increase capacity to and from Australia and place downward pressure on international airfares. Domestic, though, the average airfare has increased by 9.6%, Janice, over the March quarter.